We turn now to the Carolinas, really the Charlotte area's real estate scene. It is pretty much a microcosm of what's going across the nation. What does the real estate market look like these days? We have inflation, we have interest rates, all of these monetary economic factors and the Trump administration's executive orders. People are questioning their own investments, including their home. So I want to bring in David Hoffman from David Hoffman Realty this morning to talk specifically about the Charlotte metro area. Hi, David. Thank you for joining us here. First time in the Live Impact studio.
And thank you for having me, Jane.
And David, you and I have met over the last couple of years. This real estate market has been up and down, kind of a roller coaster ride. And what is the word on the street now? What are you guys seeing from the realtors' point of view?
Yeah, definitely. Jane, we're moving towards a buyer's market. You know, we've been talking about how it's moving in that direction the last year and a half, and we're definitely moving towards a buyer's market. Now, some would say that inventory is still under 4 months, which would signify a seller's market, but it's so hyper-local. I mean, location's never been more important than today. You can have one community with a week supply, like 1 week, not even 2 or 3, and you have another community that has 6, 7, 9 months. So we've talked in the past about how the home needs to be flawless, the curb appeal inside and out, the aesthetics have to be second to none. But the price also has to be lower. And so you mentioned earlier about interest rates. Interest rates have really hurt. You talked about the Trump administration, and with the tariffs, you're seeing inflation is still fairly high. That may bring down the interest rate. If the Fed does that, that could help long term to bring down rates. But the good news for buyers is that prices are coming down. So that's moving us in the right direction. But yeah, we're definitely moving towards the buyer's market.
So what do people need to think about if they are putting their homes on the market? I've seen a lot of for sale signs out there, actually.
Yeah, inventory is the highest in a decade, Jane. And interest rates are the highest in 16 years. So if you're a seller looking to sell, we still only have 3-4 months inventory. Some communities, like I said, only have 1 or 2 weeks. But the home has to be flawless. See, during the pandemic, we were spoiled. You just put a sign in the yard. You don't even need a sign in the yard. You just put it on the internet. You take pictures, use your cell phone, and you sell it above market value. Now, you have to wait until your neighbor's house is under contract. You need to have more pendings and actives. And the home, the curb appeal, the aesthetics, the upgrades, the landscaping, all need to be flawless, Jane, because with high interest rates, and a lot of people are sensitive to the pandemic, a lot of people gave a lot of their cash then, stock market is down, people are hypersensitive to spending the money. They're very discerning. They don't want to do anything unless it's flawless. They don't want to buy the new car with 500 miles. They want it to be brand new, or they want a great deal. Same way with the house.
Wow. So what can people do then if they need to sell their house this spring or summer?
Well, the good news about the market right now is that we're in the spring, right? So the next 4, 5, 6 months are the best time of year. And so they need to have the house ready first and foremost. They have to be honest with themselves that if they know something's wrong with the house, the buyer is going to find it way before the inspection. So top priority is to get the house ready to go, and then to have a trusted agent that could be honest with them and say, first and foremost, this is what top dollar is. But secondly, don't list today, wait a week or a month. You have to be ready. Most people don't look at real estate as being liquid. You know, stocks, you buy and sell and trade all day. Real estate has moved towards that, where, Jane, if there's no inventory this week, you're going on the market today. But if there's 2 actives, you might wait a month for them to go under contract, because if there's more than 1 active, then everyone wants what they can't have. So if there's options, they just wait for prices to drop, and the prices will drop if there's too much inventory.
Wow. Okay. So timing is everything. That's always the market anyway. What do you see then the rest of the year?
So the rest of 2025, we're going to see a few different things.
It's a loaded question, I know.
Yeah, no, definitely. But it's not hyperbole. It's going to be different for different, right? Like, so there's going to be some communities where prices are going to be stagnant or even go up. There's going to be other communities where prices are going to drop up to 10%. If the home needs work, it's going to keep dropping until it gets to a price where it's below the optimal value, where someone can get a good deal. You know, you see on HGTV, you buy the house for $300, you put $50 into it, you flip it for $500. That's where we are today. Even if it's not an investment, the buyer wants to know either it's flawless, or if I'm going to pay 6.5–7% interest rate, I'm going to buy with equity. And so for buyers, they can get a great deal. For sellers, they're going to watch prices fall and fall unless their house is flawless, and they talk to the neighbors. So again, if you're looking to sell your house, it used to be, Jane, you put your house on the market a week to a month, 3 months later, it's on the contract.
Right.
Now, if there's 2 actives in the community, they're going to keep dropping, and the buyer is more discerning today than ever before. See, after the pandemic, a lot of buyers realized that they led with emotion, and so now they're going back to logic. They're really holding on to their cash, and if they see other options, they're going to wait for all of them to drop, and some prices will fall not just 10, but maybe 15, 20%, while other neighborhoods, you could see them stagnant or even go up. But as an aggregate, some people are expecting 4 or 5% appreciation. I think that's because of the really hyper luxury price points of $4 million and up in Charlotte.
Oh.
There's going to be a lot of homes $800,000 to $1.5 million. They're going to drop 10+%. $100,000 drop is pretty common nowadays.
Okay, so if you are in the buyer's market, what price range are you looking at that's seeing the most growth?
The most growth is the first-time home buyer, under $550,000, $600,000. You know, FHA loans have a higher ceiling now. Conventional loans before jumbo have a higher ceiling, and with inflation, $500,000-$600,000 is a new first-time home buyer market.
Wow.
And with rental rates so high, with everyone moving to Charlotte, a lot of investors are looking at that $500,000-$600,000 home. So anything under $650,000, even $750,000, is getting the most interest.
Okay, and then I was going to ask you about the folks that want to put their house on the market. It needs to be perfect,
Yes.
and they need to get out of here. What is their alternative?
So they have a few options. One option is get it perfect to put it for sale. Get it perfect to put it for sale, but also put it for lease. Not only so you have the
Okay.
option of selling or leasing, but also you create more urgency and you get more buyer pool to the house. But the number one priority is to have the house looking as close to flawless as possible, and then trust your broker to tell you when to put it on the market. You can't just look online, oh, you know, the birds are chirping, the bees are buzzing, the flowers are blooming, now's the time. It could be today, Jane, it could be 3-4 weeks. Your neighbors' houses have to be under contract.
Okay.
If the neighbor's houses are not on the contract, you'll see price drop after price drop, and it's going to be a race to the bottom for whoever has to sell the fastest. You don't want to be part of that.
I mean, really, and you mentioned it, that Charlotte is growing, people are moving here,
Absolutely.
so you would think that homes need to be swept up. We have this housing problem or
Yep.
lack of. What do you say to the people that are trying to find a home, they can't get into it, and you're saying that it is a buyer's market?
Yeah, for someone looking to buy, I would recommend two things. First and foremost, be discerning, be astute, be picky. You know, rates are high, but prices are falling. So be open to waiting, but also be open to having some sweat equity. Everyone wants a particular countertop or cabinet or flooring. Be willing to buy it without the flooring you exactly want and get a great deal. Get a $50,000 drop, Jane, because it needs $10,000 worth of work.
Wow.
Great investment for the long term.
Yeah, sounds like it. What else do we need to know about the Charlotte area real estate market?
Yeah, I mean, a year and a half, 2 years from now, Jane, the market's going to be roaring back and going back up. The economy has to fall for rates to fall. A lot of people who have 2.5%, 3% rates right now, they don't want to move because they want to protect their rate. For them, I recommend just holding your house and then finding a good deal on the next house, and then maybe sell it a couple of years when rates are back down to 4 or 5%.
Okay, so you have to be able to afford the next house and your current house,
Yeah.
or maybe rent it out.
Well, you know, for rent, to your point, so many people are moving here that it's a great option because rental rates have never been higher.
Yeah, that's true. David Hoffman, thank you for joining us this morning.
Always a pleasure.
All right, very good insight into what the market looks like now as far as real estate goes. If you're interested in buying, it sounds like this is the time for you, and certainly if you could put some sweat equity into it, wow, what a great idea.